I am here to share the best kept secret with you. It is actually a great time to be a buyer in today's market. First of all, you have more options. Inventory is up to pre-pandemic levels. 2, you have negotiation power. You can negotiate the best price and the best terms for you. And 3, if you are worried about interest rates, I have my great friend here, Mark Rood, to talk to you about some creative financing solutions that will take care of that pesky interest rate problem you're having. Thank you so much for joining us.
Thank you, Gabby.
So tell us, I'm hearing about ARMs, 2-1 buy downs. So if a buyer is on the fence or on the sidelines because interest rates have risen to where they are now due to inflation, what recommendations, what advice do you have for them?
Yeah, well, one, I couldn't agree with you more. I mean, it's a wonderful time right now to buy a home. I'm seeing people, and I'll get into some of the creative things, but with it being a little bit less competition, it gives us as lenders a chance to get a little bit more creative.
Okay.
And so it allows buyers to really get what their wants are and what their needs are as well. So with every client that we have, we do goals, we set expectations, and then we want to find out what really is making them tick. What really are they looking for within their home financing, whether it's payment, whether it's money out of pocket, whether it's both, and then we'll rank those. So yes, there are options like 2-1 buy downs, which what a 2-1 buy down is to put it in normal terms is if you start at a rate of 7%,
Okay.
first year, you'll be at 5%. The second year, you'll be at 6%. And then after that second year, you'll go back to that 7%. The idea is that the interest rates are going to come down. They'll follow our inflation numbers, which we've seen of recent. Those inflation numbers start to come down. That's exactly right. Interest rates will follow that. We know that, it's well documented. So as we start seeing those, but here's also the good news in the 2-1 buy down. So let's say you take advantage of a 2-1 buy down and your rate's 5% for the first year. Well, let's say in 8 months, you have an opportunity to refinance and go on a fixed interest rate where you don't have to worry about the rate moving up next couple of years. So the money spent on that 2-1 buy down,
Which is how much?
so on average, it's about 2.2% of the loan amount
Okay.
is the subsidy fee that you're gonna see that gets charged as a closing cost. Well, the cool thing about that fee is that if you were to refinance before that term was up, you actually receive that money back on a prorated amount as an equity return. So you don't just lose that money that you get when you do a 2-1 buy down.
Okay.
So that's why when people fully understand, they really get it explained to them, they can see that, hey, I don't have any risk of losing money if I need to refinance here in the near future. I have a lower rate for my first year and really have a lower rate for my second year if rates didn't come down as quickly as we think they will. So
the way we actually take advantage of this is we figure out with Mark how much it's going to cost us for this to get this 2-1 buy down. Then we go to the seller and say, hey, as part of this negotiation, Mr. Seller, I want you to buy down my rate. So instead of coming down on the purchase price or maybe giving you some money for closing costs, or maybe in addition to those things, they give us the money we need in order to take advantage of this rate buy down for those first 2 years. And the intent is that on or before the end of that second year, you will have the ability to refinance at a lower rate.
absolutely. We're actually have a couple, actually more than a few scenarios where folks have listed their house and offered the 2-1 buy down in their marketing.
Ooh.
And then when they went and bought their house, that same thing that they offered, they asked for from the seller. So they gave a 2-1 buy down or they paid for it for their buyers, but then they got it when they bought their next home. So they used it in both scenarios, which is really cool.
And here's the thing, some buyers think that in order to take advantage of that, the seller has to offer it. Guess what? You can ask for it. The seller doesn't need to offer it off the bat. You can always request it.
Absolutely.
So tell us about ARMs.
Yeah.
How do those work and who is the right candidate for that?
Yeah, so when like I said, when we speak with every client, we go through a multitude of questions. We really want to find out what their personal goals are, what their financial goals are. We want to find out about their family.
Yeah.
Are they here because they got relocated with work?
Are they keeping the house?
100%.
Yeah.
I mean, do they have kids that are about to go off to college? These are a lot of things that we take into consideration. And a lot of times if someone says to me, hey, we're moved here from Dallas because I'm here on a 4-year assignment, well, so many people in the mortgage industry are so geared to be like, yes, you get a 30-year, you get a 30-year, you get a 30-year, all I quote is 30 years.
And people do that because it's safe, right?
It is,
and
absolutely.
we're risk adverse here.
It is.
Okay.
So a lot of times if somebody tells us things like that, we'll look at 5-year adjustable rate mortgage options, 7-year, or even 10-year adjustable rate mortgage options. So what an ARM is an adjustable rate mortgage. So when I say 5-year, 7-year, or 10-year, what that means is that 5 years or that 7 years, whatever that first number is, that rate is fixed at that interest rate for that amount of time.
For those first 5 years,
That's
if we're
correct.
doing a 5-year ARM, will not go up.
That's correct.
But what happens after that 5th year?
So then you adjust to more than likely we most use what's called the LIBOR index.
Yep, LIBOR, L-I-B-O-R. Look
Correct.
it up.
Yep. So and we walk through those with you. Like if we're looking at some of those options, we're going to absolutely show them how they track that, what they're looking at. Now the idea behind doing an adjustable rate mortgage is that you know that within that term, you're going to be looking to do something else, whether it's selling the home, whether it's refinancing the home, whether it's some other type of a term. Most of the time, you don't want to get to the point where you're looking at doing or just figuring out where the adjustment is going to go. So it's very key. Actually, I saw a stat the other day that the 71% of the wealthiest people in the world put all of their mortgages on ARMs. So why do they put them on ARMs? Most of the time, they can get a lower interest rate than what's being offered on a 30-year term.
Sure.
So that's what makes it so admirable. Me personally, I've never had a mortgage longer than 7 years.
Yeah.
Never had one.
And the stat tells us that people move every 3 to 5 years.
Yep.
So by the time your ARM is going to adjust, you probably will have moved on to your next home.
100%. The home we live in now, when we bought it in 2019, I started it on an ARM. 2020 and 2021, the interest rates dipped. It was in my best interest to go to a 30-year because at that time, the 30-year interest rate was actually lower than the ARMs.
Yeah.
So I had my opportunity. And if you go back in history and you look at any decade, there's always an opportunity that everybody has always had that you could look at doing different options if you are on an ARM, meaning a lot of times you're not going to run into that time where you get to the adjustable part.
Yeah. Okay, so how much lower would an ARM be right now than a fixed 30-year mortgage?
Right now we're seeing them about 1% to 1.25% on average. Credit score has impact on it. Loan amount size has impact on it. And then 5-year, 7-year, and 10-year. The term that you're actually going to be doing has an impact on it. But on average, that's what we're seeing.
Is there any other product that I haven't asked you about that you would tell buyers to consider when they want to bring their interest rate down?
So if you're looking at bringing interest rate down, not necessarily product, but it would be in how we structure. So there's plenty of times that maybe you don't want to do the 2-1 buy down. Maybe you want to skit with you want a 30-year fixed, or maybe somebody even wants a 15-year fixed. They know that their goals, when we went through
their intake,
when we went through their call with them and went through all the questions, they said, hey, my goal is I want to get this thing paid off. I can't handle a payment every single month of what it takes to pay it off in 7 years, but I would like to maybe do it in 15 years and then pay additional when I can. So what we find in that is sometimes somebody will say, hey, and I also want to put 25% down. Well, we'll take a look at it and say, well, here's another option. So if you want to put 10% down or 20% down, and then we buy your fixed interest rate down at the same time because you're paying lower interest, especially when you're going to be paying down the principal a little bit quicker. We'll play with the numbers in that regard, put them all side by side. And at the end of the day, what my job is to show all the options.
Yes.
I'm going to show all the options. I'll give my opinion on which ones I like the best, but at the end of the day, we want them to feel comfortable, we want them to feel warm and fuzzy, and really fall in love with the option that we chose. Because we don't believe in just saying, here's your 30-year interest rate.
All.
It bugs me.
Yeah.
It bugs me to no end. So what we want to do is make sure they have them all, and then they're going to collectively make a decision as a family, because we want them to feel comfortable, because at the end of the day, they become family once they start working with us.
And with us too, you're automatically inducted into the Lira group when you buy or sell with us, so I completely understand what you're saying. So you heard it here. if you are on the sideline or hesitant to buy now because of the interest rates, there are so many things that Mark and his team can do to help you overcome that challenge. So don't let that stop you, because again, it is a great time to buy right now. Mark, thank you so much for joining us. If someone wanted to get a hold of you, how could they do that?
Very easy. So I am a person who always keeps my cell phone on me. I've taken pride from the very beginning in making sure that we always answer our calls, call back within same day. When I first got into business, someone told me, hey, if you just answer your phone and you're a nice person, I promise you, you'll be busy.
Yeah.
So that person was right.
So what's your phone number?
615-585-8884, and I am partner owner at Modern Lending.
Thank you. Bye.